get in that vibration, and then you'll attract money, But then once you have that money, if you don't know what to do with it, having the sound financial principles, you're going to lose it.
What if everything you believe about money, you didn't actually choose to believe? Today's guest says most of our financial struggles don't start with our bank account, they start in childhood. Dawn Santoriello is a best-selling author and financial strategist who has spent her career helping people uncover the hidden beliefs, driving every financial decision they make.
You are your number one investment. You can count on yourself. So that's what you should spend more on.
Whether it comes to our money psychology or what's happening in today's economy, Dawn doesn't hold back.
We have a huge tax problem coming. They just keep kicking the can down the road. And we're at the point of no return come 2040. No amount of tax increases or spending cuts is going to be enough to save us from going off the financial cliff.
Welcome to From Those Who Know, a show for everything to help you get healthier, wealthier, and wiser. Today, we sit down with Dawn Santoriello, best-selling author and owner of DS Financial Strategies. Dawn, welcome.
Thank you, Chris. It's an honor to be here. I'm excited about tonight's show.
Absolutely. Today, we're discussing money mindset, financial behaviors, building wealth, and some of the concepts from your book, Manifest and Invest. One quote from your book that stood out to me was, many of our money stories date back to childhood. And they may not even be our own. So I kind of wanted to start off by elaborating on that, because I know from reading your book, you talked about your upbringing and how your thoughts on money were established by the way you grew up.
Yes, I grew up very poor in a low-income family in Brooklyn. We were so poor, I had a black hole in my tooth because we couldn't afford to go to the dentist. So from then, I'm like, how do I make money? I never want to be this poor. So I came from a scarcity mindset, you never know what's going to happen. You could lose it all. So then once I became adopted, I was age 10, I became like a little hustler. I was doing the most chores because we would get paid to do chores. I was saving lunch money. I was selling stuff at school, like lollipops and everything. Because, remember, I don't know, back in your day, if you had that, you'd raise money for different school functions. I was like, I'm going to raise money for myself. And then I knew when to quit because other people tried and they were getting in trouble. So luckily I never got caught. So that was my story.
I think growing up, I knew I had an entrepreneurial mindset from an early age because I was going to school and selling little pieces of candy and stuff to the people. And then kind of similar to what happened to you. They were like, hey, you can't sell food or snacks that don't benefit the school in some kind of way. So they ended up making me give all the stuff back.
Oh, damn.
So what were some of the messages that you received about money growing up?
Yeah, I think you have to just go follow your passion. That's what I think, because that's where the money's going to be. No, I learned that at 19. I was working at a job and I was like, this sucks. So that's the problem. You have to do what you love, what you're passionate about. That you can't just coming out of school, kids can't find jobs. So what are you going to do? And if they do find a job, they're not getting paid to live. The cost of living. My niece lives in Long Island. She doesn't make that much money. She has to go find a second job just to even try to be comfortable to live. So you have to think of great ideas. And now it's the easiest time to do anything. You could just come up with ideas and then maybe I was just telling you before, I just came up with this little dating concept idea. I made an Instagram page. People okay, can you match me up with someone? I'm like, okay, cool. I'll go throw together some parties, charge it. And it's boom. It's just ideas flow and you just figure out how to monetize it. And now podcasts, being an influencer, there's so many ways that young people can make money. Just follow your passion and how can you add more value? Tony Robbins always says, add more value. And that's where the money will come from. So I think there's more opportunities now. We didn't have that back growing up. And
I feel the bar is even lower now because people are just so lazy because they have it so easy, right? Mm-hmm. So if you can just do that extra little research or, use AI, leverage AI to come up with some kind of research to make your idea come to life. You can even ask it, hey, I have an idea to start I want to make a bakery or I want to start a bakery because I make great baked goods, right? Yeah. And then you tell it your plan, what you're good at and how you want to do it. And it's here's a step-by-step list on how to do it, right?
Yeah, so, it's great. I made a course with you. I'm sorry to cut you off. Called Business Profit Blueprint, where I basically just put stuff in there, and then they gave me scripts, so I made little videos. I'm like, this is great, and then you go put it onto one of those platforms, and so just have an idea and just execute.
You know how many people, let's say, if I was working my blue collar job, or if it's even in the military, I'll mention, I have this idea. I want to start a vending machine business. Mm-hmm. And they're like, oh no, those are bad because X, Y, Z. And maybe they have some kind of predisposition negative thought about that. And then they'll shut you down. Even people like your closest friends, or maybe even your family. You really have to just, take it into your own hands and be like, this is not who I am. This is who I am. And I'm not going to stop myself from being great.
Yeah. And I think entrepreneurs, we just have that drive. So nothing's going to stop us. You tell me I can't do something. I'm like, oh yeah, really? You want to watch? Get out of my way. Watch this.
I love people with that mindset. Sometimes I've been the one that says, oh, you can't do that. And I love being wrong. Mm-hmm. I love watching them come back and do it and be great at it,
Yeah, exactly. Cause who would have thought I would have made it? Even and I just manifest things that's another part of the book too, that's in here, which I feel that with money, nobody ever talks about the psychology of money or the mindset that you need. So I'm big on that too. Like the house that we're in, I manifested this in 2 days. My cars, I'm really good at cars. So I manifest those in 2 days. And you just make it happen. Just get in that mindset, get in that vibration, and then you'll attract money, But then once you have that money, if you don't know what to do with it, having the sound financial principles, you're going to lose it. So I feel that's what separates me from other people in my industry. I have that mindset. I can coach them through that and then say, okay, this is what we're going to do when we get this money. And it's basic advice that everybody could start with, like your mom taught you, like my mom taught me. Pay yourself first, put away $10, $20, whatever you can a month or a week. Start small. And the younger you are, the better you have, because you have time and the power of compounding interest.
It's one thing, when I found out about compounding interest, I was probably, 28. Mm-hmm. Nobody ever taught me about what interest does. And then when the math was actually physically done out for me, I was like, oh my gosh, I should have started at 21.
Yeah.
I would have been double what I would have when I was 65 if I would have started at 21. Mm-hmm. And that whole mindset of the whole investing, that you talk about money personalities, and we'll get there later, but my personality a lot of times is the chronic saver, where it's if I just save this much, it'll turn into this. or if I don't save this cup of coffee, that's $6, I'm actually spending $96 because of compounding interest, and it almost makes me not want to spend anything. But you've worked with people across many income levels. What belief about money separates the people who eventually build wealth from those who stay stuck?
Well, the people that stay stuck, they have a negative mindset. I can't do this. They're just crying. Now, I don't like really working with them because they're just so negative. There's always, no, that's not going to work for me. Or, yeah, if only I had some more money, I can. There's always excuses of why they can't. So I try to tell them, start with what you have. But the other people who actually take advice, they're like, okay, I have a problem, but I know I can do this because I know others have done it too. So give me the steps. So they're willing to learn. And other people, they just like to complain and they don't want to do anything about it. That's where they're comfortable in that, because then they won't know who they are if they're without that story of this. They play like the victim. It's not going to happen to me just because I'm born into a negative, a family that doesn't have money. So we're never going to have money. It takes money to make money. All these stupid stories that people have going on in their head. And if they can't get out of that because they're so negative, they're not going to transition. But the other people are like, okay, yeah, I've had that stuff, but you know what? It doesn't have to be that way. I can change my life today too. What's one small step I could do? Okay, I could start putting away, instead of spending $7 on a Starbucks, I'll save that $7 once a week. So there's $28 to save that month. So the people that actually want to change will. People that don't want to change, they're not going to. And a lot of people say they want to change, but they don't, because they're not willing to do what it takes.
I think that the older you get, the harder it is to change, right? People will get really stuck in their ways.
Yeah, and it's only temporary. You think when you're in a bad situation, I've had tons of credit card debt, and I got out of it, and I worked my butt off. What I did is, my parents were going to bail me out, but I said, no, I'm going to do this, because I had pride. So I went to work 9 to 5 or 9 to 6, and then 8 to 4 in the morning, bartending on the weekends. So I got all my debt paid off in 1 year. So I was like, no, because they said, go to school, become a teacher, and you'll get your master's and we'll pay off your debt. I'm like, no, I'm not going to be a teacher. I want to be famous. I want to be an actress. But then that didn't work. And I was like, okay, well, money's easy. I'm going to go become a financial person. And then this was the best decision.
There's a part of me, I love money. I love talking about money. I love just ideas about how to make money. It almost makes me wish I would have picked that kind of career path myself. But who knows? Maybe it's never too late.
No, it's never too late. You're still young. You're in your early 30s, so you can do it. And yeah, most people, they're career changers. All it is just doing it. It's scary. I basically didn't know anyone, totally brand new field, and wasn't sure if I had a job. So I guess I'm just a natural risk taker. And like, it just,
So if you knew no one in the field, how did you get started? And then eventually, how did that snowball?
well, they always call you to recruit you. And so I was up there and they get what they call, cold calls. So they have orphans. That's a terrible name, like policyholders that don't have an agent. So you call up these people, and this is great. My acting career totally prepared me for this because you're getting no's 100 times. So I was smiling and dialing for dollars. I was like, oh, this sucks. I'm like, no way, I'm going to get a yes. It's like a game because I'm like, yeah, reject me. I'm used to rejection. So I can handle this. Other people couldn't handle it. I was constantly calling. Then I worked with a senior advisor. And then you're basically, oh, am I allowed to curse? I probably,
yeah.
Okay, you're the little bitch. Basically, you set the appointment, you drive their ass around, they feed you when they close the deal. So, and you do all the work. But I guess, yeah, without them, you probably, if you didn't know how to close, I guess you wouldn't have any money. But that's what I did. I just hunted, just kept calling, and yeah, and then you just never give up. Like people, and most people, I'm not an overnight success. It took a while. Like 2013, I made over 6 figures. 2014, 2020, like I said, that totally pivoted me. Now my goal is to hit the 7 figures within 2 years. So knock on my book. It'll happen. I'll manifest it.
That's step one, is really to say you're going to do it, set the goal for yourself.
Yeah. And you know what's funny too? Like I just remember this. I remember lying in my bed and I don't know why I would say this. I'm like, I have my own successful financial planning firm. And I used to repeat that over and over. I'm like, I don't know why I'm repeating that. I never want to do it on my own. And then boom, I was like, oh crap. Talk about watch what you say because it just happened. I don't know why I kept doing that, but I guess, my future self knew that's what I wanted to do.
I'm sure the experience for working for somebody else first really helped you set the blueprint for, doing it yourself, right?
I'm like basically on my own. Anyway, I'm like, I don't know the first thing about running my own RIA. They're like, yeah, you do. You'll learn compliance. So it's about 2.5 months. So it's going well.
Have you ever seen somebody completely transform their finances without increasing their income?
Yeah, that's what I do all the time because you can't just make more money. You have what you have. So what we do is we make sure you're maximizing the most first. Like if you have too much credit card debt, we try to get rid of that. If maybe an example, you might have a mortgage that's paid off. Well, if it makes sense, why not refinance that? Get rid of the credit card debt as long as you're not going to get yourself back into that debt. So we do that. Looking at your investments. Are they underperforming? Are you really fully diversified? I see a lot of portfolios. Most of them are heavily weighted in tech and they're not globally diversified.
That's mine.
Yeah. So everyone does it, So, but own everything is the way to go in the long term to be successful. So we look at that and also show, okay, what type of accounts? There's only 3 places you could put your money. You could put it in a taxable bucket, the tax deferred bucket, and a tax free bucket. So, and there's an ideal balance to have in each mathematically. So in the first bucket, your taxable, that includes like your savings, CDs, check and money markets, non-retirement accounts. And here you want to have about 6 months of an emergency fund. Then you have your tax deferred bucket. This is like your traditional IRAs, your traditional 401ks. And you want to put, depending on, young people, I tell them, just go all tax free now because the way the future is. But ideally, maybe some older people, they want to have about anywhere from 200,000 to 400,000, depending on what their Social Security is and if they're married or single. And the reason for that is because you could get your money out triple tax free potentially when you retire, when you withdraw the money. Because if you have with IRAs and that, you have to require minimum distributions at age either 73 or 75. I know it sounds like a far off time for you, but eventually it comes really quick and the government forces you to take out that money. And if you have too much coming out of that, you're going to be paying unnecessary taxes. So if we say you want to keep those withdrawals coming out under the standard deduction limit, which is about 32.5 now for a married couple, under the provisional income limits. And what provisional income is what the IRS uses to determine if your Social Security will be taxed. And so if they're under those limits, then you get that money out tax-free and you get to stay in the lower brackets, which we like. And then everything else tax-free. Young people, just go ahead, do your Roth tax-free because you have about 30, 40 years to retirement. And yeah, taxes are going to be really high.
The lifelong debate that I've heard about the IRA is traditional versus Roth, right? Roth, as in you take out that whole, your retirement amount tax-free, right? The argument that I've heard against Roth is that you're getting taxed going in. So those taxes aren't compounding. What's actually better?
Well, mostly I say the Roth because again, you already pay the taxes now at low rates that are low. We're in ideally, depending on what you're making, about 24% tax bracket. I see most people are in super high earners are in the 32 and above. But those people taxes are going to go way up. They were supposed to go up 2026, but again, they sunsetted it. They're not going to be permanent. Everyone's, oh, they're permanent. No, nothing is permanent with the IRS. It's written in pencil. And we have so much debt and everything else to pay for. Social Security, they're even talking about they have to reduce that by like 22 to 24%. So
I assume it is good as gone by the time I get there.
Yeah. So you want to pay taxes now at a low known rate, and then it's going to be forever tax free later on. And even if they did happen, I get this response to, oh, well, what if they decide to tax Roths? Well, usually what they'll do, they'll grandfather you. So whoever has those accounts will be okay. And the government and IRS love Roth accounts because they're getting them tax money now. And that's all they do is look, okay, money coming in now. They don't think down the road, because if they did, they would know we have a huge tax problem coming. They just keep kicking the can down the road. And we're at the point of no return come 2040. It used to be 2043. But now it's 2040 that no amount of tax increases or spending cuts is going to be enough to save us from going off the financial cliff. So I would say, yeah, unless you're in a super, super high tax bracket, and a lot of people debate this too. I always want to know the answer too. I'm like, wait. I know taxes are going up. I'd rather just pay the tax now and then get it tax free later on. If you're a super high earner making over like $1 million and you know you're only going to probably make like a couple $100,000 in retirement, then okay, maybe take the tax deduction now. But still, again, like I said, by the time you retire, you don't want to have more than $200,000 to $400,000 in that tax deferred bucket. The IRAs are traditional 401ks.
You don't want more than 400K in that?
No, because again, you're going to have to be paying more in taxes because you're going to have to take out, when you hit 73 or 75, depending on your age, well, most likely young people, it's going to be age 75. You're forced to take money out of your IRA, even if you don't need it. And that'll bump you up into a higher tax bracket. So, but if your money's all Roth, and another nice tool that I talk about in the book is overfunded life insurance. Because that's like a supercharged Roth. Because some people, you can't even put money into a Roth because you make too much money and then they won't allow it. So
elaborate the life insurance thing, because
sure.
I'm a little foggy on that.
Oh, sure. What I use is Index Universal Life. So you put in, like I have two policies. I pay $20,000 a year for one and I pay $1,000 a month. So I put that in there. It grows tax deferred. And then when I get to retirement, I'm going to have probably about $845,000 of cash value. And then my death benefit is, what is it? So that's like it's like $1 million or so. And what's good about that is not only do I have access to the tax-free cash value, I also could use the death benefit for long-term care purposes. And how I'm going to take that money out is I have money all in my Roth, my solo Roth. Okay. So when the market's down, I'm still going to need my income. I'm just going to leave the money in the market. I'm going to go into my life insurance and take out my living expenses from there. And then when the market recovers, I'll just go back and start taking money out of the stock market.
That's an interesting concept. I've never heard somebody take money out of their life insurance before. That's just like blows my mind.
And that's what all the wealthy people do too. Like, they use their overfunded life insurance because again, it's tax free. You can put as much money as you want into it. You have to design it properly. And then you have to go there's tons of different people out there talking about it. And you want to make sure you're with someone who understands the ins and outs. It's not a get rich thing. It's not a stock market alternative. It's a bond replacement. So long term, you can expect anywhere to like 4 to 6% net of fees. So it's doing what a bond does. And what that does is it gives you your whole portfolio will last a lot longer versus all your money's in the stock market and then you're stuck to the 4% rule. And then the market's going down, taxes are going up, your account balance is dwindling. And when you take money out of account that's going down, you're running out of money a lot sooner, which I also talk about in the book on the chapter on sequence of returns risk. But if you have a different bucket, it's like, okay, well, the money in the market's down. I don't want to touch that. So I'll live out of my life insurance to pay for my expenses. So, and even before you retire, you can use it. I tell people to pay it back then because it is a loan and loans are tax free. So, but yeah, it's a great vehicle. People don't talk about it because again, they say, oh, it's terrible. It's bad, but it's okay. Why? Like, what do you know about it? It's like, they don't know. So yeah, use the right way. There's a lot of people out there who abuse it, but it has to be structured properly with the right companies that have the right provisions. And that's what I teach my clients. And like I said, I have 2 of them on my own.
So why do some people lose millions after winning a lottery while others quietly build wealth over time and keep it? You have experience with this?
Yes. Early in my career, I had someone win the lotto. It was the Pennsylvania $1 million. So, and he was kind of a low income anyway. And then he won the lottery. And I guess it truly is a curse. Like all these bad things happen. Like he lost his job. Someone asked him for money. Like I think he might have got scammed at one point too. And he just had a bad cloud around him. But typically,
was it because of the winnings?
I don't
Is
know.
it a
It could have
trickle
been
down
just,
effect of that?
it could have been a portion of that because then he was just giving his money to his friends. And I'm like, it's only $1 million. And after tax, it's like six something that you got to see. And it just got unlucky. It just was like a snowball effect. But other people that win like a lot of money too, the same thing. It's also like their mindset. They're not able to handle it. It's like, okay, it's like I have a set level. I'm comfortable having like maybe 10,000 in my bank account. Or like now I have my balance is 10 million. I'm not comfortable, or even 1 million. I'm not comfortable with that. That's a lot of money, but I feel really comfortable at having 10,000. But then they say, okay, boom, they'll spend it. They just because they're not able to handle it, and then also they don't have the financial means. Sometimes like they're not. I don't want to say smart enough, but they don't. No one's ever sat down with them to be like, hey, you know what? Okay, this is what I'm going to do. Save my money here. Put this over here. I'm not going to go buy 10 cars. Go buy my mom a house. Go buy my brother a house, and like. Because it's just.
I don't think they understand what 10 million really is if that's what they're doing.
Yeah, and then you take out taxes on that in states, and then when you're in each state, you got to pay those each state taxes too. So it kind of all adds up. But they just think, okay, boom, I got this big bunch. It's like giving a drug addict, here's a whole bunch of drugs or something. Like they're just gonna like, oh, or like what is that thing with is it the marshmallow experiment where they give a kid, it's like if you don't eat this marshmallow, we'll give you another one. But people they get some again scarcity. Like, oh, better spend it all, take it now because.
They can't wait.
They can't wait. They can't wait. And then they're not built to they don't have discipline. They're like, okay, well, it's impulse buy because I was so poor. Now I got this big pile of money. I'm like, I'm going to go spend it. I'm going to go buy this, buy that. It's like you see it all the time. But the ones that are able to okay, save it. And like $1 million is not a lot, so that was like kind of easy after taxes. And then just boom, lose your job. You're going to need that to replace your income. But yeah, the other lotto winners, it's just like I guess it's partly the bad luck too. And then because everyone comes at them. So keep your mouth shut when you win. Don't tell our whole family. Get a good financial advisor. Start putting money away and make it last because it'll blow like that. Cars add up, houses, and all those things have expenses that people don't think about. And, if you go invest in certain things, then maybe make money, go start a business. That's a good use of your money to keep your money growing and compounding.
I always say that. If I came across some kind of big earnings, whether it's lottery or something else, that's the first thing I say, what kind of asset? And I'm not saying asset like a house or a nice car. I mean, what money producing asset am I going to buy first?
Yeah. Just save half it or save a certain percentage, then go spend the rest.
That's where somebody like you would come in handy. It's like, let's budget this money and you can have fun with some of it, but you have to also be smart about where the rest is going to go.
Yeah. It's like all like balance, like everything in life. Just balance it out, because if you're just taking and saving, then you're like, oh, what the heck? I'm working so hard for this. But it's like, okay, give a little bit, but here's your future too. Do you want to be working till you're drop dead? Now, if you love your job, you probably do, but still, just.
I don't want to have to do that.
Yeah, you don't want to have to do it. So
in your book, you talk about money blocks. Mm-hmm. What are the money blocks?
Okay, so there's 5 of them. Prioritizing your needs above everybody else. So you're always like, okay, I'm going to take care of my kids first. A lot of people, I don't care about my retirement. I'm going to just I got to get my kids through a good school so they get a good job. So they really push their kids. But when you should also be saving for your retirement too. Otherwise, your retirement plan is going to be living with your kids because they're going to have to support you. The next one is money secrecy. Like no one talks about money. Oh, it's taboo. Just, don't talk about it. Another one is lacking the confidence. They're like, oh, I'm not good enough. I don't know. I'm not good with numbers. And oh my God, it's so confusing. So they're not confident in that. This is the biggest one. Uncertainty and decision paralysis. People are just like so overwhelmed, so much information, or there's too many choices. Like, I don't know what to do. So they do nothing.
Is that the worst thing you can do?
I think that's the worst. You can't make decisions because they're overwhelmed and they're sitting in their head, and then they ask all their friends who aren't even in the business or have all these opinions. And so they do nothing. And then
the big thing for me is that if you take somebody's advice, it's because you want to be like them or where they are, right? So a lot of times I think about who's giving me the advice, you know? If it's somebody that never will be wealthy and just, they have this kind of different kind of mindset, whether they're working hard, doing whatever they're doing, but they don't have that same mindset of like, I'm trying to get to this level of wealth. Yeah. And it's like, that's almost a block, having that influence in your life, I think. Yeah.
And another thing I just thought of too, people ask me, actually it's my family, and they don't have much money now. They're like, oh, should I buy this stock? And I'm like, you should kind of save and make sure you have an emergency fund in place and other stuff. You're not going to get rich quick. That's what people think. Like, oh, I'm going to buy, okay, if you want to buy that stock, you need a lot of money if to have a big impact, and you're buying one stock. it's, buy the whole market. But people, they think there's a panacea. Oh, I'm going to get rich because this thing's going public. I'm going to be a millionaire. And I'm like, no, just follow basic stuff. You can't get rich quick. Like, it's just not like stick to the principles, like invest, save. Don't just try to make it happen overnight because chances are it's not. I mean, you're just chasing the hot stocks. Like we talk about, I don't know if you're ever familiar with evidence-based investing. I talk about it in the book. It's basically boring because you're not picking individual stocks because only like 4% of all the stocks out there actually beat their index. We don't try to time the market. Not like, oh, I got to get in at this point. No, you got to be right 74% of the time. You need to know when to get in and out. Basically, just staying invested is the best way to go. And then don't chase past manager performance. During the Great Recession, all those money managers that were number one the prior year, none of them were number one. So it's like just stick to buy low cost funds, fully diversify across the globe, lean towards small and value companies, and stay the course. Don't jump in and out when, oh my God, the market's crashing and this is happening. Yeah, that's also what I find very interesting. Every time something happens, oh my God, this is the worst it's ever been. It's never been this worse. And I was like, people, calm the hell down. I'm like, it's always going to be something. Wars are going on constantly. Oh, this president's in. I'm freaking out. I'm like, it doesn't matter who the president is. The market doesn't care. The markets are up and down no matter what. Whether it's Republican or Democrat, they all have about the same amount of ups and downs. So it's just like stick to the principles. But the media, they're the biggest, they want to push fear on you because fear, then you total control of people. You send them panicking and doing stupid things. But if you just cut out the noise, I don't even listen to it. I don't even know how I stream. So I'm happy. People tell me what's going on, but I don't need to get involved in all that freaking noise. You stick to the basics and then your money, you're going to do the same as someone else, except you're not going to have the emotional stress because you're not sitting there. It's crashing. It's even. You're going to get the same returns in the long run. If you move in and out, you don't make any money.
Yeah. Whenever people have that fear, they're always, they see something happen in the news, pull their money out. Yeah. People that are less educated about money usually just pull of the market. They pull their money out. And I've heard a saying that said, something along the lines of when people are fearful, be bullish. And when they're bullish, be fearful. Yeah. People are afraid and they're pulling their money out. The market's going down. That's a great time to buy.
Yeah, good time to buy. Yeah. That's the one question I always ask people. And luckily, a lot of my clients, they always talk about, I'm like, what? Again, lack of confidence in their knowledge. One of the money blocks. I asked them the one question, okay, in 2028, the market went down this much in a short amount of time. If your portfolio did the same, what would you do? Buy more, stay invested, sell everything, and a lot of them say, yeah, remain invested. I'm like, okay, that's good. See, I might, a lot more than other people because they're freaking out, selling and getting out. So, but people, just stay there. I even give an example in the book. If you invested, I think it was over a 40-year time period or whatever, you stayed invested and the market crashed the very next day you invested and you never did it again for another decade. Then you're like, okay, the market's going to put money in and crash again. You still ended up with what I figured it was $900,000 just because you didn't pull your money out. But imagine you just keep investing systematically over 40 years, you're going to have. And
ignoring the market's ups and downs, just keep putting a percentage of your check in there. And
don't worry about it. Yeah. Just keep putting it away. It's going to grow if you have time on your side, compound interest.
Or another good quote that I've heard is that the two best investors, those who forget their passwords to the trading apps and dead people.
Yeah, exactly. Yep. Because you're not sitting there it's a long-term thing. That's why it's called investing. You're doing it for the long term. If you need money, to go buy a house in 2 months, you're not going to be in the stock market. That's insane.
Another question that I have is about money personalities, because in your book, you mentioned that there's 5 money personality types.
Yep. The compulsive moneymaker, the compulsive saver, the compulsive spender, the person who's indifferent, and then the worrier. So the compulsive moneymaker is okay, I got to come up, make ideas. How am I going to make money? And it's all about that. They're just okay, money. That's the number one priority. The saver, they're okay, I got to save. They're just making all of it. They don't have a life because they just want to save everything. They're free. And then the compulsive spender, they're just okay, boom. Oh, I want that. That looks good. Oh, that sounds, okay, I'm going to buy that. And the indifferent person's oh, I don't care, whatever. They don't they don't open up anything. Just okay, whatever. And then the worry is okay, how I was okay, what if everything, I lose it all? The market's going to crash. Oh no, what do I do? I'm not going to invest. I'm going to wait. I'm going to wait until it gets better. So those are the different personality types. And you probably see yourself in some, or even a couple, because no one's just one particular. There's usually a combination of them.
Yeah, if I had to pinpoint a money personality type for myself, that's hard. I feel you say you could have more than
and
right?
It depends on what you're going through.
Personally, I feel I love to save. And I am also like, I have the personality of what you said with one of your other clients is that's the freeze. Like I have so many ideas and sometimes it's like, all right, like, well, if I commit to this, it'll be an opportunity cost and I have less time to do this. And then I'm just stuck.
Yeah.
So yeah, I don't know. It's a very interesting concept because once you're conscious of your personality type, then you become more powerful. I think.
Yeah.
You know, so I think that's very, very important to be able to unlock that in your own life.
Yeah. And what you could do in your situation, set up a little account, like, okay, this is for my ideas that I want to execute. So then you don't feel bad about them. Like you have the money in there, a certain percent of your income, you just funnel through that. And like, okay, well, that's specifically earmarked for this. Okay. And I'm going to go, that's going to fuel my money making ideas. And I'm still going to save my other money. And this is kind of like a separate part. It's like an investment. So that might make you feel a little better.
Yeah. I just have to really just sit down. That's one thing too. Like I don't really budget my money. Like I know, like I make enough money to sustain, you know, my lifestyle. I don't overspend on stupid things, but like, I feel like a budget, and it's tough too because my finances pivot a lot. Cause like I'll be working my civilian job. Then they're like, oh, by the way, now you gotta go on military orders. And then that goes away. I had some other business idea that I was pursuing and then I put that on hold. And so it's really hard for me to like make a budget with my money situation. Cause it's like, it's not consistent, you know? I'm very all over the place.
Yes. What you could do is like take a whole year, look at it. And the easiest way is, okay, if you just save 20% of your income and spend the rest. But that's just like the very basic one. But if you add up all your expenses, what you need, what's the worst month that you're going to have, just make sure you have all that covered. And then everything else is like extra. And then in the lean months, it's like, okay, at least I have these covered. And if I need to go dip into my savings to cover those months, that could be like a helpful way to look at it. Yeah.
And it's been tough too, like getting out of active, like when I was active duty full time. And I only got out of that in July of last year. So like this year it's just been like trying to figure out like who I am.
Yeah.
Like you know, what I'm going to do as an actual human, you know? What's the biggest mistake people make when trying to get out of debt?
Oh, that's easy. They start keep spending on the credit card. It's like, you got to stop. You can't be trying to pay it off and you're still charging. It's like, okay, what are we doing? And then get your money. Why are you doing? Like sit down and ask them, why are you buying these things? Some people, like, might need a psychologist or a psychologist to be like, okay, why am I compulsively buying these things? What needs is it filling in me? And once they get that, then they'll be okay. Like that's what I said too before. When people want to refinance a mortgage, pay off their credit card debt. Okay, well, are you going to get back into debt? Oh yeah, then no, we're not doing that. You're only going to dig yourself in a bigger hole. So they have to get their mindset right. Okay, why are they spending this way? They have to do some deep inner work to stop that and then come up with a budget. Like, okay, I talk about the debt avalanche and the debt snowball, how to get rid of the debt. So then once you get rid of that debt, start save. And also simultaneously, like you maybe a couple of months, you might not be able to fund your 401k because you might have so much debt. And if you're younger, that's okay to do that as long as, again, that we have to just tell yourself, I'm going to become debt free. I live debt free. And maybe that's a mantra. I live debt free. I live debt free. Say that over and over. And the only good debt
manifest.
Manifest it. Like use a prayer in my book. And then that way you're not going to just rely on that and change your spending. Like, okay, it's not in the budget this month. I'm not going to go buy that. Or another way too is like the entrepreneurs, okay, have a little side gig, a side hustle. That's your play money. That's the money you get to spend. If you don't have enough in there to buy what you want, okay, well, I'm not going to buy it this month. So it's all about creating discipline and not getting yourself to more debt. And just work and come up with a plan, stick to that plan to reduce the debt. And then you'll also feel a sense of accomplishment. Okay, I'm knocking this off. Because that's probably true. They're overwhelmed. I'm like, I have all these cards. How am I ever going to get out of debt? Well, you just have to stop ignoring it, stop the excess spending, and just take action.
And you advise people to prioritize just the highest interest debt first?
Yeah, that's the most efficient way to do it. But if people, again, you got to meet people where they're at. If they're like, they want to see the balances, like the run that payment's done, do the smallest balance, and then just so you can knock off the cards. Or did I say that right?
Yeah.
Yeah, the smallest balance, so you can see those go away. But mathematically, the highest interest rates make more sense to do it that way. But again, if you're someone who needs to see that you're accomplishing something, and try to do, like, if you can consolidate, get 0% interest, that's a good idea, or a way to, you'll have to pay a little fee to do that, depending on how much debt you have.
Yeah, that's what my girlfriend did. She had a ton of credit card debt. I'm sorry for saying that on camera. But, but you know, she did that where they just consolidated it and it's like interest free and it's, and again, like I don't have credit card debt like that. I never have. So like all this stuff is new to me, like just on how to like repayment plans and all these other things.
But it's good. She'll learn. She'll teach. She's never going to want to have to deal with this again. So good spending habits and good saving.
What about investing habits? Let's say somebody owns a home, right? And their house has a 3% interest rate. They got in when the market was good. And then the stock market's at like averaging 7%. Do you advise people to just pay off that home mortgage?
No, don't. Like it's 3%. I tell people have a mortgage as long as you can, because again, the only way to get the money is you have to write a check to get access to a home equity line of credit. If you lose your job, you're not going to get that. Like you put your money elsewhere. Like I said, have it in like your overfunded life insurance. So like if you have enough money in there, you could write a check and pay off your house. Like, and COVID was a perfect example. People who are always rushing to, I'm going to pay off I'm never going to lose my job. I have a solid job. I'm good. I just want to pay off this house. Well, now you lost your job or you're waiting for, what were those payments they gave people? I don't know.
Stimulus checks?
Yeah, stimulus checks. Well, you couldn't go to the bank and refinance because you had no job. So what a lot of people did is they relied on I'm like, don't worry guys. We have the life insurance. We get the money from there. But yeah, your house, it's only 3%. Like, why would you pay that off? You can have your money, use that extra money to pay elsewhere. And if your payment is too high, that means that you're living in a house you can't afford anyway. So, and now I guess it's harder for people to even get a house. So that's fine. Yeah.
I'm trying. It's not easy.
Yeah. So yeah, don't pay off a house. Yeah. Because again, the equity in your house earns zero. You have to sell it or to get the money out or go borrow it out of your house if you have a job and you could get it. So, but if you have money elsewhere growing and like you're earning in the market, you're earning 7%, why are you going to, pay it off? And the house is going to say, okay, now you have a paid off house. Like how does that feel? Like,
I would rather my money make 7% than pay off a house.
Yeah, exactly. Because it's just sitting there doing nothing. Like, be like, oh, I feel safe. Safe, like your house could burn down. Okay, the insurance covers it, but that same thing with the mortgage. If you have a mortgage and the house burns down, you're still going to be safe. Like, So, but just like these things that we're taught, but your money's earning more growing there. So, and they used to have this chart. Don Blanton shows this. He's one of my mentors, Circle of Wealth, where it actually, if your house isn't worth like, what is it, like $3 million later, and you pay $300,000 in 30 years, that was a bad investment. And then, so it's just, don't pay off low.
I say that again?
Yeah, like $1,000. If you want to pay cash, then that cash should be worth selling in 30 years of $3 million. And most people, that's not going to happen. So it's saying just pay that monthly payment and then also invest the other half too.
I think that most people don't understand is that people look at, I'm going to buy a house and then let's say $300K to $3 million. Like, that's great. That's like a 10x return.
Yeah.
That's great. But like, in the time, if you would have taken that 300K and put it just in a trust fund, like you'd have way more than $3 million in that.
Yeah. So don't pay cash. Like give it for $300,000. Now you have no money to go invest. Pay that for monthly payment and then go invest the rest. But and then the house, it's not an investment because you're going to have your taxes that you have to pay, the HOA fees if you have that, the maintenance costs and all that. So it's make a place to live.
Right.
Unless you get rental.
Psychologically, it's like, okay, you feel secure because you have your own place. Yeah. Like, that's great. And I think that's worth something too. Mm-hmm. But, if you look at it strictly as your home is an investment, that's a bad mentality.
Yeah, exactly. Because you could be underwater, like something could happen, like the house market's good, people are upside down. And so things could happen like that too.
Kind of segueing. I know in the book you mentioned about rental properties and how you bought cash flowing properties. Just for my own personal curiosity, when was that?
This was in 2011. I bought, it was a house. I got a mortgage, 30-year mortgage, and I put was it 12.5? It was only $64,000. So I bought that, rehabbed it. That was a nightmare because it was painful. I wasn't making any money. And then when the income started coming in, I loved collecting all the checks. And actually I'm closing on it tomorrow because I had too much stuff going on. I'm like, I don't want to deal with it. It's 2 hours away. I just like.
You're closing on it as in you're selling it?
Yes.
Okay.
After 15 years. So I got my money's worth. I made all my money back, selling it for 210, bought it for 64. I was collecting all that income coming in, but I'm like, I don't care.
When you're younger and more ambitious, you're like, yeah, I'll do this. I'll put in the time. I'll put in the work. And after a while, it's like, cool.
Yeah, I have so many things. I run my own financial planning firm. I have this house now. I'm president of Fem City, so I have all that going on. And it's just I'm like, okay, what can I cut down? There's only so many hours in a day, and I don't want to I'm not up there. So when I end up in that town, they're always like, they're not good to outsiders, especially women. So it's like, if I need someone, how am I going to go find a plumber? And my one friend, he's getting older, so he can't take it. I'm like, you know what? Get out now. Got a good price for it. I got 15 years worth of money out of it. So I'm happy about that.
When you talk about getting a property that cash flowed on day one, I'm like, all right, this had to be a long time ago. Because now,
Yeah, my mortgage is only $251.
nowadays that doesn't exist.
You can't do it here. It's like $251. I could put the money into it, and then no, it didn't really cash flow on day one. It was when I rented it out, but it was like it paid for itself. I rented out one unit, and I was living for free, and then I was like, I don't want to live here anymore. I'm like, this is Scranton. No offense to people that live in Scranton, but me being from New York, I was like, no, this is not me. But it was good while I had it, and all these years I had all that money, and that was my play money in my account. So I was like, okay, cool. Here's my little play money. And so yeah, you got to know what you're doing. Like a friend helped me. He's like, yeah, this is a good deal. And I'm like, and this piece of shit. And so I saw the potential when I usually don't. I'm like, okay. Then he helped me rebuild it. And I was like, okay, good. The checks started rolling in. I'm like, oh, I like this.
I have some friends that did, that were big into real estate investing, like when it was good. And nowadays it's like how do you, people are getting out now.
Yeah.
Because it's like, how do you even really like make money in the landlord game now?
Yeah, it's like, hard. Like even whoever's buying my house, I don't know how they're going to do it. Because now, like my mortgage is literally $251. I was profiting like $12 to $1,300 a month. So I was like, and now they're going to have, who knows? It's not my problem anymore. But yeah, I don't want to do that. That's just like it was just.
That's another episode for another day. I can find somebody that's actually cash flowing now.
Yeah.
I'm curious, but I don't know. That's something that I was interested in for a while. But it's like after actually like put my nose to the grindstone, was looking at deals. I'm like, this is how.
Yeah, I guess you gotta love it, know what you're doing. Like I'm just a woman, and no offense, like I don't know how to build things or fix things like that. And like my friend taught me, but I was there with him. I'm like, this is torture. Like I don't want to do that stuff. I'm 2 hours away, so it's not. If I still live there, okay, it'll be a little bit easier, but it's just too many things on my plate. I gotta let something go. Do what you know, and I know finance well, so I'm good at helping people make money, manage their money, so that's where I'm focusing my energy.
Good.
So.
Yeah, that's kind of something that I feel like I've struggled with, and I know I'm doing it wrong. And it's the fact that just focus on the thing you're good at, and to make the most, and you can pay other people to do things they're good at for you, right? Yeah. And I think that's where you'll really strive the most.
Yeah, I'm counting that too. Hiring my first full-time employee, I'm like, oh, well. So then you have to give up some of your money to let them. But in the end, it should work out to help you make even more money.
And was that another, money block in a way? It's like hiring somebody?
I guess it would be. I'm just frugal. I built blood, sweat, and tears to what I have. And plus, I like my lifestyle. And plus, again, I love my clients. So they got to be like really good. And plus, I want someone like me who knows how to get things done. I like this. I'm fast. Like you get things done. Don't just sit there and like do nothing. Yes, I'll be overcoming that because my busy season's coming up. So gonna have to pull the trigger.
You talk about the 4 pillars of wealth in your book. Can you briefly describe the 4 pillars of wealth, what they are?
Sure. It's mindset, having your money right, saving, investments, and what was the other? Oh, protection. Yeah. So having all those work together in a comprehensive plan. So 1, okay, get that mindset right. Stop getting clear your money blocks. Like, okay, now you're having money, you're making money. How are you going to manage it? Okay, we're going to invest this way. Like I said, evidence-based investing. It's the easiest thing and it's boring. But yeah, most people, when they invest, they want excitement. But this is investing, not gambling. Right. You want to gamble, go over there. This is invest tried and true, academically backed. So you do that investing to get your risk tolerance score correct, invest according to that score, and rebalance every quarter. And don't freak out. We're not moving money just because the sky's falling or this is happening and something crashed and, no. We're staying the course as long as you're in the proper allocation. And then also protection. You need to have guaranteed streams of income. So annuities are good if you're 50 and older. Otherwise, stick with the life insurance retirement plan, also known as the LIRP, the overfunded IUL policy. That's good because, again, that's another tax-free bucket that we're building. So we've got those protections there, invest, and then save. You want to have some liquidity. So about, like I said, 6 months of money in a savings account or high yield or money market. That's like for an emergencies. And it has your best interest, like look for a fiduciary, a CFP, like myself. Because again, we have a higher ethical duty of care, standard of care, whatever you call it. But yeah, and just someone you're comfortable with. Because again, they're your person. So you're going to have to talk to them about money and want to be able to communicate.
And you're doing an upcoming webinar on the 4 pillars?
Yes, July 14th at 12 p.m. So they can email me or go to my website. The email's on there, dawn@dsfinancialstrategies.com. Website is dsfinancialstrategies.com. So we talk about a little bit, basically everything we did in the book, a little quick overview, how to save, how to invest, how to clear your money blocks. I'll do my manifestation prayer with the group, which is pretty powerful. I also gave some testimonies in the book for that. So yeah, so if you could join, go ahead, register. It's free.
That's my other question too as well. How much it costs.
Yeah.
Free is good. Free information.
Yeah, free information. And then they also offer a complimentary strategy session if you sign up after the class. If you go, that way we look at your particular situation and help get you on track.
If a person is, a little lost financially, do you ever recommend that they focus solely on one pillar first? What's the most important pillar?
Well, just to get started, save something. You got to start saving. So even if you just save in a savings account to begin with, or just open up a Roth, put like $20 in a month or whatever, just get started. Don't wait till you know everything. Don't wait till you have your mindset. Just start saving, because you're going to get the mindset. That's going to come. You'll get the protection stuff. Like I said, annuities, you don't even need those until you're like 50 and above. Look at your bills. Like, people are afraid to look at things. Make sure you have enough money coming in. Look at your bills. Is there any way you can cut expenses? Are you have a million subscriptions that you don't even know what you're paying for? So have like a money date with yourself. Sit down. Okay, what's all my money coming in? Where's all this money going out? And just try to consolidate as much, get rid of stuff that you don't need.
You said something really big, and that's people are scared to look at their finances. Yeah. People get in the hole, like not the best way, but one of the more common ways that people cope with it is just avoiding it entirely. And that's probably one of the worst.
Yeah, that's the worst thing, because it's just going to keep compounding. Like, compound interest works for you. They're the credit card companies, the debt, that's compound interest working for them. So take a look at it. It's not as scary as you think. There's steps you could get out of it. It's not going to happen overnight, but you can work towards it and just build better habits. But don't just sit there and bury your head in the sand, because the problem's going to get bigger. It doesn't go away. And it gets easier. You'll find out it's not as scary as you think it is. Everything's always, we make things more scary than they have to be. In our head, everything is the worst. It's like the biggest thing. Then you're like, oh, this is not a big deal at all. Okay. This is, it's you in your head, you have stories, and it's much worse than it actually is.
All right, I want to do something a little fun next. Okay. This is going to be a game called Fix My Finances. Okay. I'm going to give you some fake people and give you their background, and I want you to give me advice on what they should do next. So scenario one, this person is 28 years old. Their income is $70,000 a year. They have $15,000 in credit card debt, no investments, and a brand new car with large payments. What's the first thing they should do Monday morning?
Okay, well, again, this is just an example, not advice, investment advice, but one, open up their credit cards, call the credit card company, negotiate a lower rate, do a balance transfer, and just start paying that off and make no more debt going on, because I don't even know what their car payment is. We don't know what that is. But yeah, take a look and try to reduce that debt as much as possible and stop adding to it. I probably wouldn't have bought the car, but now it's too late. So yeah.
All right, scenario two, 45 years old, income of $120,000 a year, no retirement savings, lives paycheck to paycheck because of a lucrative lifestyle. What is this person's biggest problem, and can this person still recover financially?
They're 45 years old. They got about 25 years to retirement. So they're not going to be able to live like this in retirement. So they better start now, cutting back a little bit, start saving. Nothing in retirement. That's kind of, it's kind of bad, but you could, now that you know 20 years ahead of time, you could start saving. So maybe, again, look at your finances, open up a Roth IRA, start putting money in there, put the max that you could put in there. A 45-year-old could put $7,500 a year in that. Again, it all goes back. Pay yourself first. So you're going to have all these expenses. They're going to have to get cut because you've never saved before. You got to start saving, because it's a ticking time bomb.
I know somebody, 45 years old, no retirement, and they make about half that. Mm-hmm. Is that detrimental? Are they doomed?
So let's open up a Roth account, start saving there, do little things. Another thing too, if people live in this area like New Jersey or PA, go somewhere cheaper. I don't know where else it could be cheaper to live, but take on a roommate, do something, get another part-time job. Think of a little thing that can help bring in some supplemental income, because if you have no savings, what are you going to do when you're 65 and you're older? You might not be as healthy as you are now. You may be tired. You better start saving now, otherwise, what are you going to do? So you're not due, but just start saving. Give up something now. Otherwise, you're going to be forced to give up stuff later on.
Last person, scenario three, 19 years old, $40,000 a year, lives at home, only $1,000 saved, wants to become wealthy, has no IRA, has no financial plan.
Okay, well, this person's good. They're living at home. They already have 1,000. See, they have more than the other two clients, and they're so young. So they know how to save, so they can just start saving more, and they don't have to pay anything. So yeah, I would just say open up your Roth so you have that systematically saving for you. And you live at home, so just you probably don't have any expenses unless you're like my parents. They made me pay for everything, car insurance and all that stuff. But most parents I see now, they pay for everything. I know one parent, they're paying cell phone bills and everything. So they have it made. Stock away everything you can. And when you're that way, because then you'll be way ahead of everybody else. Like again, he could save $7,500 into his Roth, open up a LERP if he has extra money, a life insurance retirement plan, put about at his age, he can even just put $300 a month in there. That'll grow nicely. Yeah, so he'll be okay. Just start saving, open up your investments, and just you have time on your side and save as much as you can living at home.
Next one's going to be a lightning round. So I just need like one sentence answers to each of these. First question is, biggest thing people waste money on?
Oh, I guess alcohol. Going out and spending $25 for a drink. Where was I? I was in New York. Yeah, spending money on alcohol.
Yeah, I was a bartender in New York, so like I know how much the drinks cost.
Yeah,
so
it doesn't cost that much, so you can just stay home and drink your drinks.
Mm-hmm. One thing people should spend more money on.
Oh, investing in themselves and their like how to grow like in their field. Like I'm constantly investing in my education. I pay for $10,000 a year for an EdSlots IRA advisory program, so I learn everything. Just always putting back, like yeah, you are your number one investment. Like you could count on yourself, so that's what you should spend more on.
Yeah, things that you can make more money.
Yeah,
like with the knowledge that you.
Yeah, exactly.
Most overrated.
Yes, invest in your 401k. But what they don't tell you, they everyone thinks it's the traditional side, but you're just building up taxes right along with your money. So the best advice is to go put it into the Roth 401k.
Most underrated financial habit.
Oh, just consistently saving. Put in, like I said before, put away $50 a month. So people don't realize that over time that's going to have a big effect. They're like, oh, it's only $50. What's that going to do? But you do that over a long 20, 30, 40 years, that's going to grow. You're going to have a nice pot of money there.
Yeah, I think one thing that's good for me is that I'll just download an app where you're just constantly, there's a recurring deposit every week, every month.
Oh yeah, that's the best way to.
And you're putting it, and then you just put it in an investment, whether auto invest it or you pick a market. Mm-hmm. And I think that's just one of the best ways to.
Yeah, otherwise you're not going to do it. You're like, oh, I forgot this month. Okay, yeah. So automatize everything.
One book everyone should read besides your own.
Okay, my favorite guy, David McKnight. He just came out with a book called The Secret Order of Millionaires. You can find it on Amazon. That's good for people anywhere age 20 to 45. Then everybody else, older people like 45 and above, read The Power of Zero, also by David McKnight. So sorry I gave two. And of course, my book.
My favorite, and I talk about this all the time, is Rich Dad Poor Dad. Mm-hmm. Have you ever read that before?
A long, long time ago. Is that what Robert Kiyosaki read that one?
Yes.
Okay, yeah.
It is an old book, but I just feel like the fundamentals in there are just so important. Like everyone should read that. Everyone should read it to their kids too. Mm-hmm. What's one financial lesson every 25-year-old should learn?
Let's see. Just avoid, don't get into credit card debt. I guess don't get into debt. Don't overspend. That would be a big one. A lot of people, you get your first job when you're 25. You're like, oh, good, I have money now. But start getting those good money habits right away. Since you never had money before, save 20% off the top. So then you're better off. It's easier because you're starting from nothing. Now you're going to have, say you have 100,000, okay, 20 grand, save it into your savings account, your 401k, your Roth 401k, open up a Roth IRA, and you're never going to miss that money. So then you're going to be used to living on that. And then every time you get a raise, again, save a good part of that raise, and then you could elevate your lifestyle. But that would probably be the biggest thing to know. It's easy, but it's probably hard to implement because most people are like, oh, I don't want to do that. But do it right now, and then it'll help you for the rest of your life because you won't miss the money because you're not even going to feel it.
It's funny the amount of people I tell them, yeah, I put away 20% of my check. I'll never see it.
Yeah, see, you're good.
And they're like, 20%? They're just blown away by that much money. I'm like, that's, to me, it's a good amount that you can pull out, whether in retirement or later in life.
Yeah, exactly. You're going to be fine.
When I joined the military, there was a lot of, especially when I was an older person going in, so it was a lot of 19-year-olds. Mm-hmm. And I'm 8 years older than them, 10 years older than them. And they're just they have no idea. That's their first job and they're just being crazy and they don't know anything about saving. And I'm like, if you take the money and you put away 20% and I do the math and it's you make 1 million and 1 point whatever million at this time, they're just or I can go drink. And I'm like,
It's like, see, that was the worst investment now.
I tried.
Yeah.
I tried.
I know. My niece, I'm like telling people, I'm like, start saving, start investing. I'm like, you're so young. Like, you're not even going to feel it. You're going to be better off because, so even I have to save way more than you just to come up to the same amount at age 65.
Because time is
Yeah,
like the
time
biggest
is-
thing on your side.
Yeah, exactly. And I made mistakes. I had to start all over again. It's like, boom, if I just would have like been disciplined, but I guess it's just human behavior. But now when you know, you just do better. And that's why I try to help everyone and tell them, hey, just do these basics. It's easy.
It's easy, but some people don't think about the long term. I think that's the biggest.
Yeah, I guess we're so everything instant gratification. is
Same thing with
money
the
now.
government. They're the same way. Right?
Exactly. They don't look down the road, just give us our money now, like pay us and we'll worry about everything else. Like,
The best person in life to bail you out is yourself.
yes, exactly. No one's coming to save you.
For this last one, I created a tier list. It's like trending right now how it's people rank everything.
Oh no, I feel so old now. Okay.
If you could narrate as you go, that'd be great.
Okay. We have index fund investing. This is a cool game for me. So I'm going to say I like that. So that's going to be an elite. And hopefully it's a good index fund. Multiple streams of income. Oh my God, I like that. That's also elite. Negotiating your salary. Oh, multiple streams of income. Why is this not working? Oh, I guess it can only do. Okay, here we go. Negotiating your salary. Okay, that's a good idea to do. But you're stuck in a salary job. So I'm going to give that a C. Auto invest in every paycheck. Oh, that's elite. Yes. Okay, I'm getting the hang of this thing now. Buying a home with 5% down. Well, like I said, depends on everything. So I always put 20% down. So you avoid the PMI.
What if you can't? What if you have to put 5% down?
You can't then, you don't have to, then yeah, I guess.
Well, that will also
That's-
imply that you're probably a little more tight on money.
Yeah, you'll have to have money too. Or you might be good and you want the least amount down. You don't care about the PMI. So we'll go good. We'll go mid. We'll say B. That's it, B. Starting a business. Well, it depends on if you're built for a business. If you could handle it. But if you can, yeah, that's a great way because then you're your own boss. I'm giving that an elite. Carrying credit card debt, I'm going to give that 4. D. Living below your means, that's good. That's going to be great. But I know, I guess a lot of young people don't want to do that. So make it great, not elite.
Our standards for a living are so high now, you know?
Yeah.
So people just want to spend.
Yep.
And things are more expensive.
Yep. Starting a Roth IRA at 18, that's good. I'm going to say that's great. And I think that's the game. I didn't have any Fs.
All right. Let me see that. Okay, so this is all good money advice. Okay, so at the bottom is credit card debt. Like me, I think I almost would put that in F just because I'm a credit card debt hater.
Yeah.
And I feel like it's the worst way it's to put yourself in the hole. You know, it's like,
You won't get to
it's the opposite of investing in yourself.
Yep.
For your like long term, it's like compounding against you.
Yeah,
as you
exactly like you mentioned.
negotiating your salary. Yeah, I agree with pretty much everything you said. But yeah, cool. Any other closing thoughts?
No, but this was really good. And I think we covered everything in there. Save, don't have debt. Don't try to get rich quick. It's boring if you do it the right way, investing, but you're going to be okay when you get there. Gambling is throwaway money. So that's just money you just want to burn. Don't do that with your money that you need to live on in your future. And then if you want to learn more, you could go buy my book. It's on Amazon. Manifest and Invest. Live your best life. Get your money right. Like Chris said, I have my webinar on January 14th at 12 p.m. Eastern time. Also, you can go to my website, dsfinancialstrategies.com, and I'd be happy to answer any questions that you have. And if anyone mentions this podcast or you share this podcast with a friend, I'd be happy to give them also a complimentary strategy session with me.
All right. Thank you for another episode of From Those Who Know. Signing out for everyone that wants to get healthier, wealthier, and wiser.
DS Financial Strategies LLC is a registered investment advisor. The following is for informational purposes only and is not an offer or solicitation for the sale or purchase of any securities or advisory service. Exposure to ideas in the financial vehicles discussed are not investment advice or a recommendation to buy or sell any financial vehicle. This information is not tax or legal advice. Individuals should consult with a professional specializing in the fields of tax, law, accounting, or investments regarding the applicability of this information to their situation. Past performance is not a guarantee of future results. Investments will fluctuate, and when redeemed may be worth more or less than when originally invested.